Hello everyone, this is the pre-market report video for today 6th February 2024 for the Indian stock market in terms of Nifty and Bank Nifty. First, quickly let's see what happened on US market last night. Mentioned this on the last pre-market video. Yesterday early morning around 7 o'clock Indian Standard Time in the US TV news channel, US Fed chairman gave a TV interview. As we expected, in that he asked the people to give some time for Fed and they need more data confirmation before they are relaxing the interest rate. This is the first negative. Second, Institute of Supply Management released the service payment data for January month. The data came as 11-month highest value 53.4, which was way more than both analyst expectation as well as compared to December month. Then another most important issue is in that they mentioned that the non-manufacturing prices increased to 64. In PMI data, we know anything above 50 is an increase or expansion. And here, please look at this chart. Each bar represents the PMI value for that particular month. As we see, almost last 24 months, the trend for the price was always downwards, but all of a sudden in the January month, PMI prices increased from 50 range to 64. What this is indirectly telling is, we can expect an elevated inflation number for January month. Anyway, thus it increased the 10-year treasury bond yield by 3% to 4.16%. This is the 1 month highest value. To make the things worse, the 10-2 spread inverse yield curve becomes worse by 7%. And the same on dollar index as well. The dollar index value increased to 104.5. So all those whatever we discussed so far were the negative contributors. However, sometime in the middle of the day, Goldman Sachs upgraded the Nvidia's target price from $625 to $800. They cited and they expect there will be an increase in AI demand, which kind of supported some AI stocks and provided some support to the overall market, but not enough to make it positive. Anyway, in the end, last night, Dow Jones dropped by 0.71%, S&P 500 down by 0.32% and Nasdaq was down by 2%. But the surprising fact was, despite this volatility, last night US VIX decreased marginally by 1% and moved near 13.5. Then, in case of oil, again there was an escalation in the Red Sea, which subsequently resulted in increase of oil price by around 1%. At the time of this video, WTI crude is trading near $73 per barrel and Brent crude is trading near $78 per barrel. Coming to Indian ADR, apart from HDFC Bank, all others dropped marginally of around 0.2%. So, I won't say it's outright negative, more of flat to negative. Even 1 month arbitrage calculation did correlated that. And another surprise, HDFC Bank increased over 1% despite it closed negative in Indian market. However, in terms of GIFT Nifty at 3 AM Indian Standard Time, it closed at 21,821. Hence, it's kind of indicating 20 to 30 points gap up opening. Here, just one more thing. Yesterday, the premium on the GIFT Nifty to the spot market dropped from over 100 points at the start of the day to just 20 points at the time of closing. To some extent, it's kind of understandable because we had a huge selling pressure in final Nifty trading hours. But still, if there is no premium in future market, then the upward trend won't sustain. Anyway, that's the overall about the global market. Now, let's move to the Indian market related info. First of all, what really happened yesterday in Indian market? Basically, I think it's a chain reaction. Around afternoon time, Wellington Management, one of the biggest asset management company who got the AUM of over $1 trillion, released the 2024 Global Equity Outlook. In that, mostly they said very good about India, but they also mentioned that Indian small cap and mid cap across all the sectors trades above the historical average. Again, this is just a known mild negative. However, they did strongly highlighted some issues around Chinese market. Already, Chinese market is in the rock bottom because there was no broader support from the Chinese government, which in turn made the Chinese future market dropped significantly, especially the small cap index, which dropped over 6%. As a consequence, it affected the MSCI Emerging and Global Index. Hence, it resulted in affecting all the MSCI India related stocks. And also this option trading algorithm haven't helped either. Finally, I think all these made the Nifty to drop suddenly and closed negative. So now, because to some extent yesterday it started in China, I think Asian market positivity expect to play some important role today. About institution, for the second consecutive day in a row, FII was net buyers. The net bought shares worth approximately 520 crore rupees. However, DA net sold shares worth approximately 1200 crore rupees. Moving on, yesterday Airtel closed significantly negative like over 3%, expecting the bad results, but surprisingly, according to me, the result was not that bad. I mean, compared to Bloomberg estimation, their revenue, operating profit and margin all comes as very marginally down. However, it was 2% above the last quarter. More importantly, their ARPU, average revenue per user, comes as 208 against expectation of 203. For a telecom company, this metric is very important and I consider this as positive. Let's see how market reacts to it. Finally, yesterday evening, S&P Global released a report about Indian banks. I mean, at present, Indian banks having the credit growth rate of somewhere between 16 to 20%. That in the next financial year, they expect it to drop 12 to 14%. From the top line perspective, this news is not positive for banks. However, HDFC Bank area haven't reacted to this report at all, but I think it's worth to know. As a summary, US market was down, Indian IT areas were mildly down as well. However, GIFT Nifty indicating the positive opening, and also despite negative closing and volatile, US VIX decreased, so those were in favor of the market. I mean, clearly the global momentum at present is not good. However, for some unknown reason, GIFT Nifty is kind of indicating positive gap up opening. Let's see. Moving on, as per stock open interest, Aurobindo Pharma, Shree Cement, Airtel, BEL and UPL got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, IOC, Ashok Leyland, Bosch, Lupin and RBL Bank got an increase in open interest with a positive price close, indicating the long build-up. About the things to look out, Britannia Industries, Nykaa, JK Tyre and NLC India are some of the major Indian companies' earnings results are scheduled released today. In terms of macro, there is not much that I am aware of during our market hours. However, in the aftermarket hours, US Energy Department EIA will be going to release the short-term energy outlook. Just a reminder, today RBI's monetary policy meeting is starting. Then on Thursday, they will tell us about their interest rate decision, and at present, the expectation is that RBI is going to pause it. So, despite being FinNifty expiry today, I expect the market to close again sideways. But don't take my word, as I may be a little bit good in predicting short term or stock basis, but I know I'm very terrible in predicting day by day basis. Coming to technical, Nifty opened 70 points gap up and it maintained there for most of the day. However, the last hour selling pressure made the Nifty to close over 80 points negative. Thus, on the daily chart, Nifty formed a medium bearish candle with minor upper and lower shadow. Here, it's not exactly, but resembles kind of a bearish engulfing kind of pattern. First, shooting star candle and now bearish engulfing, which indicates strong resistance around 22,000 level, and on the hourly momentum indicator indicating a negative divergence. So, as long as Nifty trades below 21,900, technically indicates the further weakness or consolidation, and it might slip till 21,650 to 21,600. On the flip side, above 21,900, the sentiment could change and the market could move up to 21,950 to 22,050. Then in case of Bank Nifty, it was also under pressure and it now broken the 10-day EMA exponential moving average with lower highs and lower low formation. Here, if we form the sloping support trend line using the low of January 25 and January 31st, then Bank Nifty hits the upside, so we can expect breakout on either side. But there is one thing, 46,500 looks like a very strong resistance and the immediate support is at 45,400 and a breach below this level is anticipated to trigger additional selling pressure. On the weekly options front, the maximum call option open interest was at 22,000 strike followed by 23,000 and 22,100 strike with meaningful new call option writing at 21,900 strike, then at 22,000 and then at 22,100. Thus, from the options data, it's indicating that 21,900 is the near term resistance and then at 22,000. Whereas on the put side, the maximum open interest was at 21,000 strike followed by 21,700 and 21,500 with new put option writing at 21,700 strike and then at 21,200. Hence 21,700 to 21,500 is likely to be the immediate support. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this as not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.